The Bank of England has an absolutely insane plan. This plan is essentially to print money in order to stop the currency crisis that is currently unfolding in the UK. It has gone from bad to worse. Central planning has exploded in the UK, and they are trying to pull out every stop possible in order to do and make hard decisions, which doesn't surprise us at all, does it really? So let's take a look into Reuters and see what they're saying about this. So stocks pull off 2020 lows, Bank of England steps into calm bond market. Okay, so the Bank of England said it would temporarily buy long-dated bonds linked most closely to workers' pensions and home loans in light of a surge in 30-year bond yields above 5%, their highest since 2002. So basically their response to this mess that the UK government created is to essentially print money. This is all happening at a time with rapidly high inflation in the UK. They are essentially going to monetize government debt. Now, this is just utterly insane in my opinion, because essentially you are fighting fire with fire when it comes to inflation. You're also sending a signal out to the market that you have no clue or understanding what you are doing when it comes to this inflation fight, and the currency has sold off again on the back of what they've said here. So yes, they're gonna safeguard these home loans and pensions as the result of letting their currency spiral out of control, because who is gonna want to invest in a currency like this when they are just having this disastrous central planning that is going on? And you know, I don't often agree with what central planners said, but in regards to what Larry Summers said last week, that the UK is behaving like an emerging market is totally true, and they are being treated like an emerging market too. So it's kind of insane. So it also just says real quick here, investors have been rattled in the last week, in particular by soaring bond yields as central bankers have raced to raise interest rates to contain red-hot inflation before it tips the global economy into recession. I mean, I was in the UK back in March and it was already in a recession. So, I mean, where are they heading right now is likely into a depression. They're probably going to be the first country in the Western Bloc that is going to head into a depression, but they won't be the last. Canada, New Zealand, and Australia are just lining up ready to go, because as soon as something goes bang in their economy, they're going to come in and probably enact the same stupid policies, because they will do anything they can to try and protect asset bubbles, which in turn just collapses them and collapses everything around them as well. I mean, there's always trade-offs to these decisions, and you've always got to ask, well, what is the trade-off? You see, the general public thinks that there is a free lunch out there. They think that, you know, the government can just print money to infinity and everything will be okay, and the mainstream narrative dictates what they think. And it's really, really interesting, I think, what is going on. So it also says here, you also have the contagion element. The IMF and the US Treasury waded in yesterday in fear of global contagion from gilts to other markets, he said. The International Monetary Fund, the IMF, and ratings agency Moody's criticized Britain's new economic strategy announced on Friday, which has sparked a collapse in the value of British assets. So that's essentially what's happening there, kind of absolutely insane. So let's see how the currency is actually responding to this. Is the pound up? Is the pound down? It was down significantly earlier, around 1.5%, and it's still down right now. So this is pound dollar, and you can see right now today it's down 1.26%. And it's continuing the sell-off that has been staged, heading back down to these lows here, which is 103. So the prediction that the pound could be worth less than a dollar is probably going to hold true at this rate, because the Bank of England should have come in and at least talk the talk and walk the walk by raising interest rates. Yes, it would have bad consequences, but it's like we said, there's no free lunch in this situation thanks to the UK government. So there's got to be a trade-off in some sense, and collapsing the currency is probably the worst trade-off that you can go for. But the thing is, the central planners, they don't care, because they're absolutely rich and probably diversified anyway into different currencies, so they don't really care. But for the average Joe and Jayne, they are just totally mashed by this. They are just being mauled by a bear. And it's just kind of mad when you really think about it. But at the end of the day, they don't care, because at least nobody is pointing the finger at them and saying, you did this. No, they'll just be pointing the finger elsewhere, maybe at the Bank of England, or maybe at speculators. Maybe they'll start blaming speculators, just like they did in 1987. You know, these things just seem to repeat over and over again. I wouldn't be surprised if they came in and said, like the Japanese did last week, oh, we're going to buy some pounds. The central bank's going to come in and buy pounds. And what happened then? What happened when that happened? The Japanese yen, sure, it went down for a little bit, and then it continued to just crash against the US dollar. So the thing is, these things that central planners do often have the total opposite effect of what is happening. And that's what you've got to realize. You know, these central planners, they don't have a clue, and this is clear. And the problem is, they are sending out the signal right now to everybody that they have no idea what they're doing. And that is why the currency is selling off. It's down, 2% in 5 days. And if you look in a month, it's down nearly 10% against the US dollar. This is just insane moves in currencies. And when you compare it to other currencies, you realize that it's not just a strong US dollar story. In fact, let's head over to the euro, because the pound, they buy most of their goods from Europe, so they have to exchange for euros. So that has a big effect. And you can see here that pound euro is also down today. And if you look at the monthly chart, it's down around 5-6%, and it is just coming back down again, and that was after it crashed to the lows on Monday. So it isn't really good. When you look at these long-term charts, it's been happening for a while. And if we go back to that pound dollar chart, there's something I really want to show you here with the pound dollar, is that this was actually a trend before they had this mini budget ridiculous blow up that they've had. So if you look at the 1 year, the pound is down 21.54% against the US dollar. Just let that sink in for a moment. That is just absolutely nuts. Compare that to the Canadian dollar, which I think is around 10%. You can just see how the difference in rates actually does have a dramatic effect on what the currency does. Yes, the US dollar is still going to be strong, but your currency is not going to be as weak as it is right now. And really, this has big consequences, because now with their money printing, they're just increasing the money supply, which is just going to mean their currency is going to fall even more in value. And it's just ridiculous policies. And the stark reality of this is it's going to affect the poor. It's going to affect the middle class the most. The rich, they hold gold. They're diversified into different assets and currencies. So they're going to be less affected. The people who have 95% of their wealth, even 100% of their wealth in UK assets, are just going to get obliterated by what the government and the central planners have done in this case. And the reporting in the UK is also very, very interesting, because the way they spin this narrative, you have to remember in the UK that the public sector accounts for more than 50% of business activity in the UK. So just let that sink in for a minute, how much government involvement happens within the economy as a whole. It's over 50%. So when you think about that, you have to realize how the media is just so manipulated by the UK government. So they will always try and spin the narrative in a way that sides with the government in most cases. And, you know, I think this is ultimately just a disaster for it's just a total disaster, because you cannot get away from the fact that the fact that the pound is down 21.51% against the US dollar, the fact it's down 18% against the euro, or 15% in a year, that has massive, massive consequences, because that means when pounds are being exchanged for euros, they're worth 15% less. Somebody has to pay that price. It's either going to be a UK household, and we know they're going bankrupt, or it's going to be a UK business, and we know they're going bankrupt at a rapid rate. So who is paying the bill for this? And it's going to be the government through money printing. And you know, there's elements of Greece, there's elements of Turkey, and there's also elements of Weimar Germany, as you're going to see in a video that I recently edited yesterday, where I talk about the history of the English Civil War, what happened in Weimar Germany, and how this all sort of has flavors of what's going on from those eras back then. So it's really sort of alarming. It should be alarming for people, and anybody who's watching this in Canada, in Australia, in New Zealand, should be thinking, wow, I need to really diversify. If this isn't a warning, I don't know what is, because honest to God, this is not going to be the last currency that this happens to. And this is not, in my opinion, the right way to attack this situation. Yes, they're managing to bring bond yields down right now, but are they going to do that continually forever? At what cost will that have? And how high will they have to send inflation? And how much will they devalue their currency by doing all this? And those are the questions that you have to ask. So anyway, guys, I thank you so much for being on this live stream this morning. Markets are imploding again, it seems like today, at least on the FX side, and we'll continue to monitor this and see what happens. Watch out for that video I've got coming. I will see you in the next one, guys. Take care of yourselves. Peace. Bye-bye.